Welcome back. Now, for some, pensions are just something that old people have to worry about, and the process of starting one of them can seem mystifying.
But all the advice is that because of Ireland's ageing demographics, it's now essential to start a private pension as soon as possible. And here to give us a Pensions for Dummies guide is financial advisor Paul Merriman of AskPaul.ie. Paul, good morning to you.
Paul.
Good morning.
We hear it all the time, don't we? If you haven't started a pension, you need to start now. When should people, if they're young enough to be watching this morning, when should they start?
As soon as possible is the #1 tip for everybody.
Is that like your first job?
Yeah, if you can. I mean, just give you one simple figure, not to bore you on Sunday morning with figures too early in this, but if you were, say, 20 years of age and you put €50 a week gross into a pension plan for 5 years and you stop at age 25 and you do nothing ever again, you'll have about 197,000 in your fund when you got to retirement age, just because of compound interest and tax-free growth. Like, that's phenomenal. So just for those 5 years, and then you never have to kind of do anything again.
You see, the thing is, when you're 20 to 25, the last thing you're thinking about is pensions.
The reason I use that example is to show anybody, no matter what age you are, the real thing is that the earlier you get into your pension, the easier it's going to be, and the better it's going to, and the bigger it's going to be. People always ask me this question, Paul, how much do I need to put into my pension? Whatever you can afford. Don't put it off. Just start small, start something straight away. And as the years go by, you can take it up and start putting a bit more in.
I was reading in the notes there, Paul, that for some of the reasons for starting a pension, and probably one of the ones that jumped out at me was that because the state pension, the age to qualify for that is getting pushed out further and further and further to 68 now.
It'd be 70 soon.
And even the amount that the state pension is, €12,900.
Yeah, just over £1,000 a month.
So that's a real incentive, even in your 30s or your 40s.
Well, the other thing as well, if you look at kind of recent figures for mortgages as well, people are borrowing until they're 70.
Yeah, true.
So again, if you think you're going to stop working at 65 and the state pension, even if you got it at 65 in today's terms, or 66 or 67, it's still only going to be £1,000 a month. So the mortgage, is gone nearly on your pension.
Yeah.
Now, Paul, if you have a pension through your work as part of being an employee of that particular company, is that enough, or should you be going off to do your own thing as well?
It depends on how good the employer contribution is, how good the pension scheme is. Most of those employee or employee kind of relationships and pensions, they match each other. So sometimes you have a contribution from your employer, say 5% or 5% from you. You can also top it up with an AVC, so additional voluntary contribution, which is very, very good from a tax planning point of view to do that. So I'd always recommend, excuse me, if it's available to you and if you have the resources, to definitely start putting AVCs into your pension plan as well. But again, if you have that kind of 10% rule of your income going in, you're generally speaking not going to be too far off.
And is that a guide? Is it 10%?
It's a very rough guide. You see people putting in more, but obviously the older you get, it depends if you've nothing behind you, you need to put a little bit more in.
Yeah.
But you've been doing it kind of from your 20s. I see an awful lot of clients come to me and they maybe started off in a company pension scheme, say in their 20s, and then they may be self-employed or they go to another company and they have a couple of different pensions from their career. You can roll them all into what's called a PRB, different PRBs for yourself. So you get control over your old pension as well. That's something people forget about. They just forget about them when they leave the jobs, which is a shame,
In terms of, Paul, what's on offer in terms of the pension market, is it much of a muchness, or is it like everything else that's worth shopping around for?
It's much of a muchness. It's worth shopping around for your advisor. That's what I'd say. I mean, there's 6 or 7 major companies in Ireland doing pension. You see the advertisement starting now. And the reason it started is because the October self-employed deadline is the end of the month. So all the self-employed people are going to be told, should be told by their accountants to offer their tax into their pensions. And that's why you see all the life companies' marketing teams going mad on TV and radio. So that's why. But yeah, look, if you're in that space, like really getting a good advisor to sit down with you and go through how much you're putting in, where you get tax relief. The biggest thing about pensions is
funding. Now, when you say advisor, Paul, sorry to cut across you, but I'm just thinking of viewers at home are instantly thinking, an advisor, I can't afford an advisor. Is that a consultancy fee that you need to pay someone? It
depends. Some advisors will be based on a consultancy fee. Some will be based where they get remunerated from the companies wherever they place their business in ways of commissions.
Like a mortgage broker?
Yeah, exactly the same thing. So a good advisor will give you the option to do both. Do you want to charge a fee or do you want commission? And most clients go to commission option. But again, there are very good fee-based advice out there.
So it shouldn't cost you anything?
It shouldn't cost you an awful lot of money to get your advice. The main thing when it comes to pensions, though, I say to everybody watching home, is the funds you're invested in. The lower your age, the more risk you can kind of take with investing in your pension, because it's all about tax-free growth. So again, the younger you are, the more risk. The older you are, when you start getting into your 50s towards your 60s, you want to be de-risking your pension. But I've met people that are in their 30s and they're sitting in cash or very low risk funds. I'm saying, you've got 40 years. So like markets are going to do well for over 40 years on average. So again, getting a good advisor, sitting down and making sure you're in the correct fund. Now, one that's obviously in your own risk appetite, not too crazy.
But something that's also key there that you mentioned is that the growth is tax-free.
Yeah, the growth is tax-free, and that's
People don't realise that, do they?
No,
Yeah,
they don't realise. That's the big thing. If you look at anything else, like a deposit account, you pay your dirt at the end of the year. If you have an investment property, you pay your tax, your rental income at the end of the year. But in a pension, you pay no tax until the very end on your exiting. So again, it's like 40 years for some people, or 20, even 30 years of tax-free growth or revenue. Don't touch this kind of tax haven. I think pensions have a very bad rap. I think from a name point of view as well.
I think particularly for someone who's self-employed, it's kind of not that it's a no-brainer, but it's
kind of is a
it is a
no-brainer.
no-brainer.
You're paying revenue at the end of the year as well. You know, especially when it comes to October.
What's the tax relief on it?
It's the higher rate of income tax is 40%. So if you put 10,000, it only costs you 6. So it's really, really, really good. But like I said, don't be, if anybody, I've got a site at askpaul.ie, so www.askpaul.ie has a lot of information on it. I also take questions off anybody if you want to get in touch with me today to say, look, I'm in this situation or that situation, we'll get back to them. But just don't be afraid of them. They're really, really easy. It's just a savings account. That's all it is. Like set up a bank account.
In your checklist, though, don't be afraid to ask.
Don't be afraid to ask, and don't be put off. And that checklist as well, a big tip was don't be put off by other people's experience, because I sometimes come across people saying, my grandfather paid into pension for years, got pittance back. But he probably paid pittance in, no disrespect, but he probably paid in 10 a week and he got 20 back. It's a good return.
Or maybe chose the wrong plan.
Or the wrong plan or the wrong advice,
The important thing about remembering old pensions, if people are remembering them but not sure what to do about them, where do they start?
Well, you can get in touch with me first of all, and we can find the pension for them. Something we do nearly every day for people is find these old paid up pensions. They can transfer then their own name into what's called a personal retirement bond, and they can take ownership of the managing of that money. So that means they can decide, Paul, I want to invest it in this fund or that fund. Or
and do they have to invest it into another fund, or can they cash it in?
Well, no, they have to transfer. You can't cash it. Depending on your age. Most of those periods you can get out from age 50, which an awful lot of people don't realise as well. You can actually access the tax-free cash element from 50 years of age, which is quite cool. But other than that, no, you typically just transfer it. So if you're in an occupational pension scheme, so a company pension scheme, there'll be trustees that will manage that fund, and they mightn't be managed it the way you think you want your money managed. So you're basically taking away from the trustees, put it in your own name, and then you go and invest it how you want to invest it. And that's really the kind of benefit of doing that, which is really important.
Something to consider, isn't it, for so many people?
It is. As you said, askpaul.ie.
Yeah,
people want to get on and ask any kind of questions.
Any questions on Facebook, ask Paul
pensions
as well.
related, obviously.
Yeah, pensions related.
Not relationships.
Or Man United.
Or Man United, which you were discussing. Paul, thanks a million for coming in.
No problem.
Thank you, Paul.
Cheers.
Right, coming up after 11, there's more from Laura on the lash, drinking wine in Spain.
And we've a king prawn pasta in the kitchen, and the return of two of the grumpiest men on our box, on the TV box.
No, me and Tommy haven't got our own series, just in case you're wondering what that is. Yes.